Assalamualaikum warahmatullahi wabarakatuh. I want to presentation my article. The title is The Effect of Capital Intensity on Tax Avoidance, the Moderation Role of Corporate Social Responsibility, Empirical Study of Mining Company List on the IDX period 2016 until 2019. Background first, tax. Tax for the government and tax for the company. Tax avoidance. It becomes complicated and unique issue because it is permissible but not desirable. Capital intensity. The greater the depreciation expense, the lower the level of tax to be paid. Corporate social responsibility means to contribute to the environment in which the company operates. Tax avoidance that happened in 2019. It was carried out by Adaro Energy. Problem formulation research objective. Problem formulation. First, does capital intensity affect to tax avoidance? And does capital intensity affect to tax avoidance with corporate social responsibility as moderator? Research purpose. First, to analyze and test empirically whether capital intensity affects to tax avoidance. To analyze and test empirically whether capital intensity affects to tax avoidance with corporate social responsibility as moderator. Research contribution. First, Sandra and Anwar on 2018, capital intensity has a positive effects to tax avoidance. Zagala and Ratmono on 2015, corporate social responsibility influenced company to avoid taxes. Research update. There was a change in the variable is corporate social responsibility as a moderate variable and the company period used in 2016 until 2019. Grant theory. First, agency theory. Owner and manager relationship. The government as a principal and company as an agent have different interests in paying tax. Stakeholder theory. The sustainability of the company is inseparable from the role of stakeholder. Hypothesis development. The relationship of capital intensity and tax avoidance. The higher the capital intensity of the company, the lower the indication of tax evasion. This is in line with research conducted by Chandra and Anwar that capital intensity has a positive effect on tax evasion. First hypothesis is capital intensity has a positive effect on tax avoidance. The relation of capital intensity and tax avoidance with corporate social responsibility as moderator variable. Companies that disclose corporate social responsibility tend not to do tax evasion. This is in line with research conducted by Zagala and Ratmono, which states that corporate social responsibility influence company to avoid tax. Hypothesis 2 is corporate social responsibility moderates capital intensity on tax avoidance. Conceptual framework. In this, capital intensity as a variable independent and tax avoidance as variable dependent and CSR as a variable moderator. Research method. Research approach is quantitative research. Data type is documentary data, and data search is secondary data from financial and annual reports of mining company listed on the IDX. And data collection techniques is documentation techniques through the website IDX. Population is mining company listed on the IDX for the 2016 until 2019 period. Sample purposive sampling method with companies that have certain criteria. Operational definition and variable measurement. Tax avoidance is efforts to avoid tax by using techniques and methods in exploiting the weakness contained in the tax law regulation to minimize the amount of the tax payable. And this is the formula. Capital intensity, investment activity carried out by company associated with investment in the form of fixed asset. And this is the formula as NCSR is form of corporate social responsibility to the community, the environment, and society as a result of the company operating to ensure the company's sustainability. And this is the formula. Description of the object of research. We have three criteria. First, mining sector company list on the IDX during the 2016 until 2019 period have 38 company. And companies that publish financial statements and annual reports in 2016 until 2019 have 2 companies. Companies that suffered loss in 2016 until 2019 have 20 companies. And number of research samples on 1 year is 16, and number of year of observation is 4 years, and number of observational data we have 64. Result of data analysis, descriptive statistic analysis, and this is the result. And classical assumption test result, we have normality test, normal probability, and this is the result. And one sample Kolmogorov-Smirnov, and this is the result. We have significant on 0.054. And multicollinearity test, and this is the result, and heteroscedasticity test, and this is the result. Classical assumption test result, we have autocorrelation test, and this is the result with model summary. And simple linear regression analysis test result, and this is the result. And moderation regression analysis test result, coefficient, and this is the result. And hypothesis test result, coefficient of the determination of regression model 1, and this is the result that adjust R square of 0.062 or 6.2%. The remaining 93.8% is influenced by other factors. Coefficient of determination of regression model 2, adjust R square value of 5%. The remaining 95% is influenced by other factors. Adjust R square value that decreased 0.80 from the first regression model to the second regression model. And the simultaneous test result of regression model 1, and this is the result. And simultaneous test result of regression model 2, and this is the result. And partial test regression model 1, and this is the result. Partial test regression model 2, this is the result. Interpretation of result. First, hypothesis first is capital intensity affect test avoidance, and hypothesis is accepted. The same with research of Sandra and Muat. Hypothesis 2, CSR doesn't moderate or weaken the relationship between capital intensity and tax avoidance. That hypothesis 2 is reject. Is the same with research of Olivia and Ahmad. Conclusion: the result of data analysis conducted on mining company is on the IDX for the 2016 until 2019 period. In the previous discussion can be drawn a conclusion that first, partially capital intensity affect tax avoidance, while CSR does not moderate or weaken the relationship between capital intensity and tax avoidance. Second is simultaneously capital intensity influence tax avoidance, while the CSR moderating variable doesn't moderate or weaken capital. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.